One of the biggest runners today, excuse me, is Tesla. So Tesla, I'm not too sure if it's running based off of, I saw a series of videos that are circulating around X, which is previously known as Twitter, that Cathie Wood states that Tesla's going to $2,600 per share by 2030. Cathie Wood also is a huge investor in Tesla. She's said that comment before many, many times. Maybe it was just right timing because Tesla was pretty close to, $300 per share. So, enough hype to drive the price up. Again, nothing has changed fundamentally about Tesla. There's nothing wrong with day trading Tesla and trying to make money as this thing pumps. I mean, it's the most active and most bullish stock in my watch list. Even the NASDAQ market isn't moving that much. A lot of consolidation on the NASDAQ market, NVIDIA, a lot of consolidation. It looks like markets are almost getting ready to sell off, right? With the way that they're trading right now. They're already overbought, testing a resistance, and they're just consolidating. So that normally happens right before retracement. Tesla is one of the only ones that's actually ripping up. And again, be my guest, make your money. If you think it's such a good deal at $306 per share, again, be my guest, put your money where your mouth is and buy more, just like Cathie Wood is encouraging a bunch of newbie investors to do. But I want to remind you, Tesla reported terrible earnings. Fundamentally, right, there's nothing wrong with taking advantage of a stock as it rallies in the short term. Make your money, of course. But to think that this thing is going to continue to rocket when fundamentally Tesla's business is not growing year over year, it has yet set to launch its full autonomous vehicles in July for Austin, which Waymo, which is owned by Google, already partakes in. So anytime something is this overbought, it just comes at a greater form of risk. You don't need to be afraid to be able to buy it if you think that it's going to continue to rocket because direction is in your favor. The biggest rule when it comes down to trading is the trend is your friend, and this thing is incredibly bullish. So the thing that I want to remind you is, what's the risk to reward? Where do you see Tesla going in the short term versus where it's going in the long term? Because we all know that Tesla's business is not growing. Tesla's business is struggling, yet the stock is still pumping. This reminds me a lot of, again, the previous warning videos that I made when Tesla was ripping up to $488 per share and people were still buying at plus 450. And when I made those videos, people were like, oh, Tesla's going to go to 1,000. And I'm like, why? Why is Tesla going to go to 1,000? It's already at an insane valuation. It's $1 trillion company. Yet again, it's not actually producing at that level. People didn't have an answer. They're like, oh, because of the weather, right? It's complete BS on the reason it's ripping up. It's just hype. It's momentum, just like GameStop, just like AMC. If there's enough hype behind something, it can drive the price up for a short period of time, just like when Cathie Wood makes a statement that this thing's going to $2,600 per share. There's nothing wrong with taking advantage of the momentum. But please understand the difference between a short-term positive catalyst and something fundamentally actually shifting the demand and the projections for a company. It has terrible guidance for 2025 and 2026, and its sales and growth are down year over year. So again, I like talking. I went long on it. I went short on it originally during today's live trading session. I saw that this thing was breaking out. I quickly had to cut losses and then decided to go long on it. Then it broke above $300 per share, and then I decided to take profits. So I'm all for going with the flow of things. No question about it. I just would hate to see that people see that video of Cathie Wood's, oh, Tesla's going to $2,600. Why? There's nothing about the business right now that is pointing to that. So for people to watch that video and see this type of push, it would be very easy for a beginner to be like, okay, I'm going to buy it at $306, $307 per share intraday. And then if it begins to retrace and goes back down to 280, what was the risk to reward? That's all I'm encouraging you to do is don't just think about the upside, think about the downside. And ask yourself what your intention is. Is your intention to invest or is your intention to trade? And if so, then make sure that your plan and your timeline aligns with that. That's all, right? I would hate to see some of you guys go into this for a day trade. You buy up here and then it retraces to even just 300 or 295 and then you end up in the red. And again, your intention was to day trade. So understand when day trading something, direction and momentum need to be in your favor. And if it's overbought, maybe the risk to reward simply isn't worth it. But again, if you want to buy, be my guest. Just because it's overbought doesn't mean that you need to short it. And that's the last thing that I believe any beginner should do. So this video is not to encourage you to short it. It's just to make you aware that we are at overbought levels for a stock that is getting hyped up from a fund manager that has one of the worst track records of any fund in the past 4 to 5 years. So feel free to look into it. It's public records. It's not an opinion. It's a fact. I wish you guys nothing but the best. If you have any questions, feel free to reach out to me via Discord. And if you want to watch my live trading session as soon as Monday, it's the second link in the description down below. Like always, let's make sure that we end the year on a green note. Take care, team.